So for investment properties, so first you want to know what are the definition, okay? For the regular PPE, right? So they are indirectly generated revenues, right? They make product, they deliver service, so they generate revenues. For inventory, they are converted to cash when they were sold. Investment property are those assets generate profits directly from rental income or capital appreciation, right? Those are the investment properties. So this is dealt with in IAS 40, okay, IAS 40. Okay, so could be like land or buildings. When you rent it out, you get revenues from the renters, right? When you sell it, you get capital appreciations. So those are the features for the investment properties. Okay. So initially, you recognize investment property at cost. That would including transaction cost, legal fees. Okay. Subsequently, you can recognize investment property using either cost model or fair value model. Okay. What about PPE? What are the two models you can use for PPE? What are the two models you can use for PPE?
Cost and fair value.
Cost and fair value. You are half correct. So cost model is correct, but not fair value model.
Cost or revaluation model?
Pardon me?
Yes.
Cost or revaluation model?
Yeah. So for PPE, okay, you can use either cost model or revaluation model. Okay. You see the difference? The IAS 40 here give you two choices: is cost model and fair value model. So fair value model is different from revaluation model. Okay, don't make them to be the same thing. So fair value model is different from revaluation model. Okay. So what is fair value model? Okay. So you report investment property at fair value on the balance sheet with the changes in value recognized in profit or loss, not OCI. Okay, not OCI. For revaluation model, right? Revaluation model, okay, if it's the surplus, cumulative surplus, that goes through OCI, right? But for fair value model, it goes through profit and loss, the income statement. Okay. Under fair value model, you do not record depreciation. Okay, you do not require depreciation. Why? Because you always check the fair value at the year end, right? So the reason why you have depreciation is that you are trying to recognize the use of the cost of using the asset, right? So that your net book value better reflects the value of the asset. But in this case, fair value model, at the year end, you had to use the fair value. So you don't have to do the depreciation, right? Because everything is adjusted through the fair value at the year end, right? You don't have to use depreciations, make adjustment on the value. Okay, so IAS 40 reflect actual market condition on the balance sheet date. You obtain fair value estimates annually, right? Annually. For revaluation model, depending on the type of the asset, you don't have to do it annually, right? But for fair value model, you have to do it annually. Now, do you see a difference between fair value model versus revaluation model?
Yes.
Okay, good. Awesome. Okay, now let's compare Okay, let's compare the IAS 40, that's for investment property. IAS 16, that's for PPE. Okay. Okay. So for cost model, the cost model, so for investment property, no difference. Cost minus depreciation. Okay. Fair value disclosure. Okay. Investment property, you have to disclose the fair value. Why? Because part of your business is about the capital appreciation, right? So you want to provide the relevancy information, how much the investment properties value. So you have to present this. For PPE, you don't have to disclose the fair value. Okay. Depreciation. Okay, depreciation. You have to calculate the depreciation on both, for both property assets. Fair value model. Okay, so you measure the asset at fair value. Revaluation model. Okay, so the sorry, this table is quite confusing. Okay.
Sorry, I have a quick question before you move on.
Go ahead.
Depreciation on the cost model for investment property, there wouldn't actually be a depreciation, just be a gain or loss, correct?
If you use
Or did
cost model,
It'll just be a, okay.
Yeah.
But for investment property, it wouldn't be depreciation, just be a loss or a gain
if you
on
use
the.
if you use fair value model, you don't recognize depreciation.
Okay, yes, okay.
Yeah.
Good.
So the fair value for investment property has to be annually, right? You have to update the fair value annually. But for PPE, could be annual or less frequently, right? Depending on the type of the asset, right? The prices changes of the market. So for IAS 40, always goes the profit loss, the gain or losses always goes through the income statement. But for PPE, it could go through OCI for those revaluation surplus. Okay. Depreciations under fair value is not required for IAS 40, but it's always required for IAS 16 under revaluation model. Okay. Are we clear about the two accounting standard for different properties?
Yep.
Yep.
Good. Okay, so transfer into and out of investment. Okay, so I'm just gonna quickly skip this. So this would be the situation that you have changed your mind, right? So now I change the use of the building, right? Before I have a renter, this is my investment property. Now I renovate the building to make it an office, right? Now it's a normal PPE, right? So this would be dealing with those kind of stuffs. Okay, I want to leave you to read it. Okay, I want to leave you to read it. Okay, so I want to still keep some time. So 7:20. Okay, for agriculture. Okay, agriculture. Okay, so basically this is a separate standard, right? Agriculture is a separate accounting standard dealing with this because of the special industry, right? So IAS 41. Two unique features: the nature of the agriculture activities, regular cycles or changes. Okay. The IAS 41 requires the use of fair value to measure biological items. Right? So my friend used to farm beef, okay, in Codell. I know a lot of farmer friends, okay. They have dairy farm, chicken farm. They are running like all kinds of crop farms. So I know a little bit about farming, but not a lot, okay. And so basically, my friend would purchase this the what do you call it, the cattles, right? Purchase the cattles at about maybe 50, I forgot maybe like a couple hundred pound, like little cattles. And his job is to put weight on it, okay? So he's gonna feed the cattles, right? And grow them up to make a ready for slaughter, right? Like maybe 1,000 pounds, right? The size, they ship it to the States or those maybe to Japan, right? So, and then they make the money, okay? And this process may take some time, right? So then what's the value of those cattle? You think about it, right? The value of those, the little ones, right? And then as the time, and then they are growing, and then, so basically his total cost is not relevant, right? So the value of the cattle is the fair value now, right? How many pounds of this beef, of these cattle, how much you can sell it for, right? That's the fair value. So for biological items, right, you can see why this IAS 41 require the use of the fair value, right? The fair value. Okay, so what's defined as agricultural activity? The management by an entity of biological transformation of biology assets for sale or for conversion into agricultural produce into additional biology assets, okay? So like dairy farms, right? The milk dairy cows, right? So the milk, we are biology assets. So living animals, what is defined as biology assets? Living animals or plants, okay? Crops maybe, and the cattle I mentioned. Agricultural produce, the harvest product of biological assets. So milk would be the harvested product, right? So that's the agricultural produce. It's not the biological assets. The dairy cow would be the biological asset, right? And the product, the milk, would be the agricultural produce, okay? That's the scope, okay? So the reason I didn't have a lot of time to do this is, first of all, agriculture things is less important than revaluation model impairment test. And also, not everyone will do agriculture. I didn't do too many files about farming or agriculture. Even though you are CPA, you are not expected to know everything. So some people are specialized in dealing with agriculture accounting stuff, okay? So I'm gonna just skip this. Okay, and make sure you are going to read the held for sale and discontinued option, read all this information chapters by yourself, okay? Okay, so yeah, I want to talk about the final exams. I still have about 20 minutes, okay? So chapter 10, I want you to put more effort on revaluation model impairment test. Know a little bit about the investment property, right? Just agriculture conceptually. So in the final exams, I will not test you on this because I don't have enough time to cover all these topics, okay? So for the final exams, 3 hours, December 14th. No, December
17th.